Good afternoon, Great Hope learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Yes, indeed, it is that time of the day when we get to meet and we punch in calculators and we make sure that we balance our books. It is accounting time. And last week I did interesting questions on the statement of financial position. I also did the calculation of correct net profit. All right. So it was a very interesting class that we had last week. If you missed it, you are able to revisit that class and follow through. We've covered the statement of comprehensive income. We've covered note 7, note 8. We've done several calculations that if you are struggling with, you are able to go and watch these lessons and get help. Remember, our plan is to help you as you prepare for your March exams, June exams, the prelims, and eventually the end of year exam. In today's class, I am going to cover again the statement of financial position. I am going to include the calculation of correct net profit, and then we're going to have some exciting adjustments. But one of the most important things that you need to have is the worksheet. There is a worksheet that is being released, so you need to have that worksheet. And today I'm going to cover two activities. The first one is from the Gauteng prelim for the year 2020, as well as the NSC November for the year 2021. All right, that is your paper one. All right, so if you have these worksheets, then we are going to do some interesting calculations today. Here are my objectives. As I had said earlier on, I will be focusing on the correction of net profit after tax calculation. All right, so this is a situation where you are given an incorrect amount and then you have to calculate the correct amount. We're going to be doing that in today's class, and I've prepared two activities for you. So if you struggle in this area, we should be able to solve all your problems today. Secondly, I'm going to look at a retained income note, and then finally we'll look at the statement of financial position. We are hoping that next week at the same time we're going to start the cash flow statement. That is of great importance. Remember, so far we've covered the statement of comprehensive income, number one. Number two, we've covered the statement of financial position, which we're going to conclude today. And then next week, same time, same place, we're going to be doing the cash flow statement. All right, so these are my objectives for today. The calculation of correct net profit. All right, so you will find that there are errors that would have been made. There are errors as well as omissions that would have occurred. And then that would lead to us having an incorrect net profit. Then we have to correct some of these errors and record the amounts that may have been omitted so that we eventually come out with what we call correct net profit. So the first point for me to explain is, if the expense was overstated, for example, if you recorded for 13 months for an expense, yet you know that in your financial period, you must only record for 12 months. That means it has been overstated. Therefore, the net profit must be increased. I'm going to show you how to do that in today's class. If the expense was understated, that means we recorded less of an expense. Less of an expense means more of profit. In order to correct that, therefore, we will need to reduce our net profit. That's the second point. Let's go check the third point. If the income was overstated, so now we're looking at income. If we recorded more of income than what was necessary, what do we do? Because it means our net profit was overstated. If we recorded more of income, therefore profit was overstated. What must we do then? We must reduce that profit. And if income was understated, that means we've received rent income for 13 months, or rather for 12 months, but we recorded 11. Therefore, we must go and add that missing 1 month. Therefore, profit must be increased in this case. And then, as I said, we're going to jump straight into the first activity. So we're going to look at the Gauteng prelim for the year 2020. And my focus is on question number 1. All right, if you don't have the worksheet with you as yet, it's not a big deal. What you can do is you can simply take down all the calculations that I'll be doing with you. And then maybe after class, if you're able to download this paper, then you can download it and still work on it. If you have challenges downloading it, you can speak to your teacher and your teacher will assist you to get this paper. But make sure next week you ask for the worksheet before class starts. All right. So around Thursday, Friday morning, make sure you speak to your teacher that they give you the worksheet, because every Friday we're going to be working on specific worksheets. All right. So as we said, we're going to begin with the Gauteng prelim for the year 2020. All right. It reads, two-way limited. You are provided with information relating to two-way limited for the year ended 29 February for the year 2020. Required. Refer to information E and calculate the correct net profit after tax. All right. So this is what we want to do. Calculate correct net profit after tax. But before we do any calculations today, make sure you have that worksheet. We're going to take a quick 1 minute break. We're going to go for a 1 minute break, and please see me after 1 minute.
I want you to ask yourself these 3 questions. Number 1, what do I want? Do I want to become an A student, or do I want to become an average student? Number 2, I want you to ask yourself, how do you plan on getting there? Are you going to put more extra hours, or are you going to just sleep? Number 3, who will be with you in this journey? Because it is important that we associate ourselves with students who have the same vision as us, who want to become a student, who want to put in the extra work, who want to become better at what they do. Unsuccessful people do not plan. They just let life happen to them. But successful people are planning on how they want their lives to be. And right now, you plan on how you want your results at the end of the year to be like.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back. Before the quick break that we just had, I told you of what I'm going to be doing together with you today. All right. So make sure you have those calculators ready, have the pencils sharp, and make sure you have somewhere to write, as I said earlier on. Okay. So we are in the Gauteng prelim paper for the year 2020, and our focus is on question number 1. And the interesting thing of this question is we are going to do the correct net profit calculation, as well as we're going to do a note to the statement of financial position, that is our trade and other receivables. I'm excited about this question because it has some very interesting adjustments which I want you to follow through. All right. So if you guys are ready, maybe let's begin. All right. So we were given information, and here is the information. The following figures were extracted from the accounting records at the end of the financial year. So this was an extract of information that we were given. And then we're given adjustment D as well. this is a statement received from Canara Bank. Okay, let's go on. And then we had that particular adjustment that related to the loan. Okay, then we had information A. You can see here it is all the information that must be considered as we calculate the correct net profit. And then you come here, we will then begin with the very first adjustment. So the first one then reads, the following figures were extracted from the accounting records at the end of the financial year on 29 February 2020. And then we were given a fixed deposit from Faco Bank, that is on the 1st of March 2019, and the fixed deposit amount is 504,000. Very important, that's the fixed deposit amount. Then we are told in the adjustment, interest on fixed deposit is earned at 10% per annum. So interest is at 10% per annum and is not capitalized. No interest has been received. So here we know that no interest has been received. All right. And remember, this is interest income. 40% of the fixed deposit will mature on the 30th of June. So let's begin. What I know is, if I have a fixed deposit, which is 504,000, here's my 504,000, and the interest rate is at 10%, and I am told that this fixed deposit has been there, right, from the beginning, from the 1st of March, that is the beginning, because we are now on 29 February. So it has been there for over 12 months. That should give me my interest on fixed deposit. All right, let's have those calculators ready now. So we're saying 504,000 multiplied by 10%, multiplied by 12 over 12. I need the figures. How much do we get? Okay, thank you. You get 50,400. This is interest on the fixed deposit that we must receive. Now, remember, this was not considered. So when I come now in my net profit calculation, I need to record this interest. So I'll then come here and I will now say, here is my interest income. This is my interest income. How much is this interest income? Remember, we've calculated it, 50,400. All right, so here's my 50,400. The next question is, this income that we had not yet recorded because we have not yet received it, is it going to increase our profit or decrease our profit? Remember, it is interest income. So we have income that was not yet recorded. If we have income that was not yet recorded, it will certainly increase our profits. So the sign here is going to be a plus 50,400. A plus 50,400. Okay. But we know that we are not just doing the correct net profit calculation, we are doing as well as the note for trade and other receivables. All right, so here we have a debtors control amount, and then if we have income not yet received, what do we call that? We call it accrued income. So I'm just going to come here and I'm going to say we have accrued income of how much? 50 points, because we're told no interest has been received. So they owe us that interest. It is receivable. So I'll come here. It is your 50,400. All right, your 50,400. That was adjustment number one. Okay, interest income, that is interest on fixed deposit, that was not yet received. Can I go on to the next one? Okay, cool. Let's go to the second one. The second one reads, The following figures were extracted from the accounting records at the end of the financial year. So remember, our financial year ends on 29 February 2020. Loan, Canara Bank, and the loan is 622,800. Then we are told, interest on loan was also not taken into consideration. Interest on loan is capitalized. The loan statement received from Canara Bank showed the following, okay? And then provide for interest on loan. So remember here, we are doing the correct net profit calculation. We are going to calculate the interest on the loan. There is a calculation that we have started from grade 10. I know this for certain. From grade 10, we've done this calculation. In grade 11, we did it again. And this year, I know you have done this calculation. I'm going to do it again with you today so we can see if we're able to get this interest on the loan. Are you ready? Okay, so you're going to open a simple ledger account, a T account, and then we're going to call it a loan account. So this is my loan account. It is a liability account. So that means on the credit side, it's a plus, but on the debit side, it is a minus. Are we good? The opening balance, so I'm just going to say balance brought down. It was 846,000. That was the opening balance. All right. And I know that once interest is capitalized, I'm going to bring it to my credit side. So my interest is going to be here. I don't know that amount is yet, but that should not be a problem. All right. And I know after my interest, then I'm going to have my double line there. All right. My double line is there. And I have a balance at the end. So that becomes again balance brought down. That is 709,200. But therefore here it becomes balance carry down. That is my 709,200. And then here are my repayments. I'm just going to call it bank here. My repayments, and my repayments are 223,200. 223,200. Now, we want to get that interest. Okay? So, have calculators ready. Have calculators ready. Which side is bigger? Is it the debit or the credit? You can see on the debit, you have two amounts. You have your bank, 223,200, as well as the balance carry down, which is your 709,200. So if you add those two figures, how much do you get? 900. Say it again. 932,400. Thank you. You get 932,400. So I'm going to come here. I'm going to get the same figure, 932.4. Do you know what to do now? What do we want? Remember, we want the interest here. So if we want interest, what then do we say? 932,400 minus the what? The 846,000. Then how much do we end up with? We end up here with interest, which is how much? Which is 86,400. So we know for certain that our interest is 86,400. Let's go and record it. So I'm going to come here now, and I'm now going to say my interest expense, my interest expense is 86,400. Do I add this interest to the net profit or I subtract it? Do I add it or subtract it? Remember, it is interest what? Expense. So is it going to increase my profit or decrease my profit? It will certainly decrease my profit because I have an expense that was not yet recorded. So if it is an expense that was not yet recorded, it will decrease my profit. So here I'm going to have a minus. All right, I'm going to have a minus because remember here they said I must indicate with a plus or a minus for a decrease. So I've put my minus there because it is a decrease. Can I go on? Thank you. Thank you. Let's go on. Let's move to the next one. The next one then reads, the following figures were extracted from the accounting records Then we have debtors control, provision for bad debts. Then we are told in the adjustment, it reads, provision for bad debts must be adjusted to 5% of the outstanding debtors. So your provision for bad debts must be adjusted to 5% of the outstanding debtors. All right. So what we know is that our outstanding debtors are 64,800. They are 64,800. So I'm going to come here and I'm now going to say my amount here, 64,800. Then multiply that by 5%. 5%. All right. I need calculators. How much do you get? How much you get? All right, thank you. You get 3,000, say it again, 3,240. 3,240. All right. Now, you will understand that this amount is the one that we record straight in our note. All right. So we're going to come here to our trade and other receivables. Then we're going to say provision for bad debts. Provision for bad debts. How much is that amount? That is your 3,240. So we take it as it is because that is the amount that it has been adjusted to. All right. And then we will now have what we call the net trade debtors. All right. And how much is our net trade debtors here? You end up with how much? If you say 64.8 minus 3,240. Can you say it again? You're going to end up with 61,560. Thank you. Thank you. Now, we need an amount that will be recorded in the correct net profit calculation part. We understand that there's several ways of ascertaining whether the amount that we've calculated will give us income or an expense. All right. There's several ways in which you could do this. One of the ways is to simply compare, all right, your last year provision against this year's provision. How much was the last year's provision? 3,420. That is last year's provision. This year's provision is 3,240. What do you see? Is there an increase or a decrease from last year to this year? Do we have an increase or we have a decrease? Certainly, we have a decrease. You have to know that an increase in provision is an expense, and a decrease in provision is income. Okay, we've covered this even when we're doing the statement of comprehensive income in the previous weeks, I think sometime in February. All right, so here we then get the difference. How much is the difference here? How much is the difference? The difference here should be 180. 180. Now, that 180, is it income or an expense? Certainly, it is going to be income. Why? Because there is a decrease. So I'm going to come here and I will now say provision for bad debts adjustment. I want to show my calculation now. How do I do it? I'm now saying 3,420 minus the 3,240. I know that my 180 is income. So I'll come here, 180. If it is income, here's the biggest question. Is it going to increase my profit or decrease my profit? This is income that was not yet recorded. Will it increase or decrease profit? It will certainly increase. So I'll come here, then I'll say plus 180. Okay? Remember to follow the instructions of the examiner. In this case, they wanted us to show with a plus or a minus. So it will be a plus 180. Can I go? All right, let's go on to the next one. Let's go to the next one. All right. The next one then reads, rent income received amounted to 94,608. It included rent for March and April. Okay, we know that our financial year is ending on 29 Feb. So we have received rent for March and April. That means instead of 12 months, we have 2 more months. So we are dealing with 14 months here. 12 months, the normal financial period. But we are told rent also includes March and April, 2 extra months. So in total, we're dealing with 14 months. All right. Then we're told that the rent was increased by 15%. All right. So the moment your rent increases by 15% on the 1st of January, then we have to be able to check the amounts that did not have an increase and the amounts that had an increase. The simplest way to go about this one, remember, we want to record this over here. All right. So the simplest way to go about this is to simply say, from the beginning of the financial year, when is the beginning? From the 1st of March. All right. From the 1st of March, 2019. That is the beginning of the financial year. We have been receiving rent, and that has now spread, and we got onto the 1st of January. So if you struggle with the 1st of January, you just have to consider that 30 December is the same as the 1st of January. 30 December is the same as the 1st of January. In this case, you must not count January. So you will now say from March, 1st of March. So you get March, April, May, June, July, all right? August, September, October, November, then December. Can you see how many months I have there? That's 10 months. Did I count January? Certainly not. Why? Because it is the 1st of January. So if it is the 1st of January that is having the increase, I want the number of months before the increase. So that will give me 10 months. So here I can say up until the 1st of January 2020, but you know that you are counting until the 30th of December, all right, 2019. All right, it's exactly one and the same thing. So this will give us 10 months over here. My 10 months are the months without an increase. So I'll consider that to be 100%. All right, and then from January now, I count January, February. Do I stop there? Certainly not, because I have received what? March. I've also received for what? April, for 4 more months. So for these 4 months, I have now received 100% plus the 15. So it becomes 115. I'll come here. This is going to give me 1,000. Are you still following me? Okay, cool. Then I say 4 by 115. Please punch that in your calculator. How much do you get? Thank you. You get your 460. Let's see that now. So I'm going to add this to 1,000 plus 460. That gives me 1,460. All right. Now, what is our problem in this case? We received for 2 months. And these 2 months, is it before increase or after increase? It is after increase. So we are looking for 2 months, and these months after increase is 115. 2 by 115, that's going to give us 230. We want 230. We have 1,460. So it's 230 over 1,460. Then I multiply this by my 94,608. 94,608. Okay, so let's see how much that is going to give us. All right, let's see if we can do that together. All right, so on your calculator, this is how you would punch it. You are now saying you want 230, and what do you have? You have 1,460. Are we good? Then you now say multiply that by your 94,608. Okay, and then you will get 14,904. All right, so our answer here is 14,904. 904. What is this? This is income received in advance. In other words, what it means is we have recorded rent income for 14 months. It increased our profits. We have more profits because we have recorded rent for 12 months, but we added 2 more months. So we recorded for 14 months. Is that correct? Certainly not. Rent that must be shown in the statement of comprehensive income should have been for 12 months, but we ended up showing 14 months. So we must be able to go and take out now. For how many months? For the 2 months. This is what we calculated over here. So you are coming here now, and what are you saying? You are now saying rent income. You are now saying rent income. Rent income. And then on the rent income, what do you now say? Minus. Minus how much? 14,904. It is income, but we're now subtracting it. Why is that so? Because we had recorded more of that income. It led to our profits being too much. Now we decrease it. Hence, you see a minus. Okay, can I move on? Okay, let's go. So, is this going to go to trade and other receivables? No. Where does it go? Trade and other payables. Income received in advance. Are you ready for the next adjustment? Okay, I hear someone saying yes. Let's go. Let's go to the next one. It trades. Trading stock of 25,200 was damaged by a storm during the year. Okay, so the place where we keep our trading stock, there was a storm, and then water went in, and then our trading stock was damaged. The good thing is that we had insurance, we're told. The insurance company accepted the claim. So we contacted our insurance company and told them our stock has been damaged, and they accepted the claim. They said, okay, we are going to cover you, but we will only cover you 70% of the claim. So our claim that we gave to them was for the 25,200. This is the stock that was damaged. But then they said, this is your 100%. We will not cover you the entire amount. They said they will only cover 70%. They'll only cover 70%. All right, let's see. How much is that 70%? How much is that 70%? So what you're simply saying is 70 over 100 multiplied by 25.2. This is what they are going to cover us. How much do you get on your calculators? Say it again, 17,640. Thank you, 17,640. This is what they are going to cover. So they'll cover here 17,640. This is what they'll cover. What then happens to the other 30%? Because they're going to cover 70. So who's going to cover the other 30? It is certainly us. The moment the insurance company does not cover the entire amount, the remainder of what they have covered becomes our expense as a business. So in this case, from the 25.2 that we lost, they will only cover 17,640, which is 70%. 30% of that loss will become our expense in this case. Are we able to get that 30%? You can simply get the difference between your 25,200, 17,640, or if you want, you can still as well say 30 over 100 multiplied by 25.2, and it will give you 7,560. Okay, so here we have 7,560. All right, so we have an amount that will not be covered. The amount that will not be covered becomes our loss now. All right, so we have a loss that we must record, and we call that your loss of stock. This is loss of stock due to floods, okay, or due to the storm. And then we're now saying, how much was that? It is 30 over 100 multiplied by 25.2. And that loss is 7,560. Whatever the insurance company does not cover becomes our loss. If it is a loss, is it income or an expense? It is an expense. So if it is an expense that we are about to record now, will it increase profit or decrease profit? It will certainly decrease profit. So come here, minus 7,560. Now, the insurance company has agreed to pay us 70%. Have they paid us? Not yet. What did they say? The claim will be processed during May 2020. But this financial year is ending on 29 February 2020. And they are promising to pay us in May 2020. So that simply means we have money that is receivable now. They will pay us. So it becomes receivable. So I will then come to my trade and other receivables. And then I will now say insurance claim. And I'll say, here is my insurance claim. And if you want to show, again, the calculation, it is up to you. How much is that insurance claim? Remember, it's the 70 over 100 multiplied by your 25,200, which was giving us the 17,640. Are we good? We should be good. All right? All right. Can I move on to one more adjustment? It reads, insurance included an annual policy of 15,120 paid on the 1st of August 2019. Okay, so we know for certain that our financial period began on the 1st of March 2019 and it ends on the 29th of February 2020. That is the 12 months. But we have an annual policy that is 12 months. It was paid on the 1st of August 2019. Therefore, if it stretches for 12 months, it should end on which day? On the 30th of July 2020. All right. So our problem is from February here to July. From February to July. All right. But we don't count February. So we begin to say March. So it's March until the end of July. From March to July. So we're going to say March, April, May, June, July. So it is 5 months, 5 over the 12 months that we've paid because they said an annual policy. And then it's your 15,120. If you punch that in your calculator, how much are you going to get? You get your 6,300. Is that what you are getting? All right, thank you. You get 6,300. What is that? That is an expense that has been paid in advance. So what it means is when we prepared our statement of comprehensive income, we entered the entire 15,120 as an expense under insurance. That means our insurance expense was overstated. If an expense is overstated, means profits were understated. How do we then correct it? We go and we add it back. What do we now say? We say insurance. Come here, we say insurance. How much is that amount? 6,300. The question comes back again. Do we add it or do we subtract it? An expense was recorded more, profits were decreased. To correct it, we add it. So we come here, it's plus 6,300. Now, a prepaid expense becomes receivable. So I'm going to come here and I'm now going to say prepaid expense. I have a prepaid expense. How much is that? 6,300. Are we good? All right. We are almost at the end of activity number 1. And then another adjustment reads, director's fees 9,000 were still outstanding on 29 February 2020. This one was a giveaway. This one was an easy one because it's director's fees that are outstanding. Outstanding means owing. So they were not recorded in the financial statements. Director's fees. An expense was not recorded. If an expense is not recorded, that means our expenses were less. When expenses are less means profits are more. So we're going to come here now to correct that. We're now going to say directors' fees. Let's go and record this expense that was not recorded. 9,000 plus minus certainly minus 9,000, so that our profit can be decreased. When an expense has not been recorded, it means profits are more. To correct it, go and subtract. Okay, here is the last adjustment of this activity. It reads, the following figures were extracted from the accounting records at the end of the financial year on 29 February 2020. SARS income tax provisional payments 524, 520. Income tax for the year amounted to 483. All right, so I know that the first place I must record is my correct net profit calculation, where I'm going to now come and say income tax. Income tax. I'm told income tax is 483, so I don't even need to struggle. Minus 483, 120. I've recorded my income tax. But I have made provisional payments of 524, 520. During the year, I made those two provisional payments, and the amount that I've already paid to SARS is 524, 520. So if I've already paid my 524, 520, yet I should have paid 483, 120. That means I paid SARS more. I paid them more. So how much more did I pay them? How much more did I pay them? I paid them more by 41,400. So if we paid SARS more, who owes SARS owes us. That is true. If SARS owes us, that becomes a receivable. So I'm going to come here under my trade and other receivables. Then I'm now going to say my SARS income tax. SARS income tax. And I'll show my calculation. How did I get that? I said 524, 520. Then I said minus 483, 120. How much do I get? 41,400. That is my SARS income tax receivable. Why? Because we paid more than what we were supposed to pay. So SARS now owes us receivable. Here is how it will look like right at the end. So this is the question that we did, the correct net profit calculation, and this is the note for trade and other receivables. We are now going to begin activity number 2. Activity number 2, which is the NSC November 2021. We're going to take a quick 5-minute break, exactly 5 minutes. Don't take it longer than 5 minutes. In exactly 5 minutes, I'm going to resume with today's class. See you in 5 minutes. Welcome back, dear learners. Before the ad break, we did activity number 1 from the Gauteng prelim paper for the year 2020, and we're focusing on question 1, where we did the correct net profit calculation as well as the note for trade and other receivables. A very interesting question. If you missed that part, please revisit it and do it as well. Now, for this part, we're going to do now activity number 2, which is from the NSC November for the year 2021. Question number 1. All right, I can see those pencils are sharp and the calculators are ready. So let's dig in. Let's go. Here's the information that we are provided from GMO Limited. And then the information continues. All right, and then here we go. Okay, so this was the answer book that we were given. The answer book that we were given. Let's begin first with the very first adjustment. So remember, we are preparing the statement of financial position. At the same time, we're doing the correct net profit calculation. So statement of financial position as well as the correct net profit calculation. So we're going to do the two at the same time. You must be able to do this two at the same time. That will help you save on time in the exam. So the first one reads, audit fees includes 123,600, which was paid in advance for the next financial year. So under our audit fees, we have 123.6, which is for the next financial year. All right. So when we come here, we're now saying on the audit fees, that 123.6, when we recorded it as an expense in the same year. But this is for the next financial year. So this is a prepaid expense. That means our expenses were more overstated. Our expenses were more. That means our profits were less. In order for us to correct it, we'll come. Then we're going to add it. You see, they said plus or minus. So I'm going to come and say plus 123,600. When more of an expense is recorded, it means less of profit is realized. To correct that, you're going to take that more of the expense, then you add it to the incorrect net profit. I'm going to move on now. Remember, we are also doing at the same time the statement of financial position. And what is this? A prepaid expense. Our prepaid expenses must go to our trade and other audit fees include that was paid in advance. So that is our prepaid expense. So it must go to trade and other receivables. Trade and other receivables. So we're going to come here and then under our current assets, we have trade and other receivables. So you would start off with your trade debtors here, which is your 3 million. So it's your 3,668,810. Then you would also add the 123,600. You would also add the 123,600 under your current assets, that is in trade and other receivables. You're going to see that as we prepare this statement of financial position towards the end, the amounts will all be added up and then we'll see how it will appear. But here's the key. Number one, this is a prepaid expense. It decreased our profits, so we came and we added it. A prepaid expense goes to trade and other receivables. There it is, under trade and other receivables. Okay, let me go on to the next adjustment. Here is another loan adjustment. Remember, we did a loan adjustment earlier on, but here we have a different one now. Let's look at it and see what is happening. We're told, here is a mortgage loan from Best Bank, 2020-2021. Remember, we read our financial statements right from 2020 here going to 2021. And the repayment of the loan are fixed at 35,500 per month. So if it's 35,500, if it's 35,000 per month and we have 12 months, how much are we paying per year? All right. So we want to say your 35,000 per month. Then if we multiply that per year, how much do we then get? Let's do it together. Let's see if we can punch that in the calculator. So we are now saying it is our 35,000 that we're paying per month, and we then multiply that by 12. All right, so if you multiply that by 12, we get 420. So it means annually we pay 420. So this is 420,000. The repayments on the loan are fixed at 35,000 per month, including interest. So in the 420, there is two things. Number one, there is interest. There is also the loan repayment. Balance as per the loan statement. So this is coming now from the bank. At the beginning, it was 4,175,000, which is the same as that. At the end, it is 4,028,000, which is now different from that. Provide for interest on the loan. Okay, so according to them, we owe this amount, which is different now from what we have seen in our books, which is 3,755,000 rather. Now, we want now to know for this year, what is the difference between the loan that we had at the beginning and the loan at the end? In other words, we are coming here to say my 4,175,000 minus the 3 million. I'm saying minus the 3,755,000. I'm getting the difference here. That will give you your 420,000. That will give you 420,000. All right. Now, that is the repayments that we have done on that loan there. But then we know for certain that on this loan, if we want to get the interest that is to be shown in our correct net profit calculation, we will come here. We want to show the interest on the loan here. We will now say the loan that we are getting on the statement, which is your 4,028,000, your 4,028,000. Then we subtract the loan from our business records, which is 3,755,000, which is 3,755,000. All right. So the difference then is the interest that was capitalized. The difference between the loan in the list of balances and the loan at the end from the statement. That would then give us the interest expense. So here, if I say 4,028,000 minus 3,755,000, that should give you how much? 273,000. 273,000. Remember, it's interest, so it's a minus because it is interest. Let me move on to the next aspect. We understand that we are preparing the statement of financial position as well, where we're going to have our mortgage loan here. We're going to have our mortgage loan. And on this loan, we understand that from our records, we were owing them 3,755,000. But this is because interest was not capitalized, which is 273. So if I come in and say plus 273,000, you will see that it will take me back again to the 4,028,000, which is exactly one and the same thing. So I take my loan from our records, then I come and then I add the interest because interest must be capitalized. All right. Now, we then come to information G, which says a fixed monthly installment of 35,000 to cover the loan repayments and interest has to be paid over the full period of the loan. So we're going to continue paying the 420 in any case, which we got here, the 420. Then we are told that the interest on the loan budgeted for the next financial period is 234. So what they're saying is our repayments will remain 420. But remember that 420 is built by two things. One, two. Number one is interest. And our interest for the next financial period is 234. Our interest for the next financial period is 234. That means the remainder is what will be used to pay the loan itself, the capital portion of the loan. So for me to get the capital portion of the loan that I'll pay in the next financial period, I'll say 420 minus 234. 420 minus 234. How much do I get? 186,000. Therefore, it means if I'm going to pay this over the next financial year, it will now cease to be a non-current liability. So I'll come and say minus 186. It now ceases to be a non-current liability and it becomes a current liability. So I'll come here, then I'll now call it my current portion of loan. That is my current portion of loan. My current portion of loan. How much is that? 186,000. 186,000. All right. I think we can close this part now on the non-current liabilities, isn't it? Whereby we close this bracket. All right. Let's see. It's going to give us how much now? 3,842,000. 3,842,000. So we bring it again to the top. 3,842,000. Just like that, right at the top there. 3,842,000. All right. Can I go on to the next one? So far in today's class, we've done two different loan adjustments. I'm going to move on to the next adjustment now. And the next adjustment reads, rent of 74,000. So we have rent of 74,000 was received from a tenant for the period 1st of July 2020 to 31 August. This has been recorded. This amount takes into account a reduction of $750 per month from the 1st of May. I like this adjustment because now they're talking about a what? A reduction. In the previous one, we did with an increase, but here we have a reduction. The year-end adjustments have not been made. Okay, so we know that there's a reduction of $750. And that reduction has taken effect from the 1st of May. All right, so we count from May, June, and then the financial year was supposed to end. But we have received for July as well as August. We have received until August. So that reduction was for 4 months. That reduction was for 4 months. 750 by 4. That will give you how much? 3,000. Okay, let's go on. So we'll now say that 74,000 that we have recorded, it is after a reduction of 3,000. So we'll come and then we add the 3,000 back. And then would end up now with how much? 77,000. 77,000. That is the amount of our rent for the 12 months plus July and August. So this is for 14 months. 77,000 is for 14 months. If I divide this by 14 months, how much do you get? You get 5,000. Say it again. 5,500. So this becomes rent per month before the decrease. But I know that my rent has been reduced by 750. So I'll come in then I'll say minus 750. So it's 5,500 minus 750. That will give you 4,750. This is rent per month after the decrease. My problem is how many months, by the way? July and August, because the financial year is supposed to end in June. So here I'll multiply this by 2. How much do I then get? 9,500. What is that? Income received in advance. Income received in advance. If I've received income in advance, it overstated my profits. My profits were more. Okay? And then in order for me to correct that, what do? I come here, then I say minus 9,500. I decrease it, all right, because my profits were overstated. If I've received income in advance, is that payable or receivable? It is definitely payable because we have received for a financial period that we have not even entered into, or for a service that we have not yet rendered. So we have received a rent, yet we have not got to that period. Income received in advance. It goes to trade and other payables. So I'm going to come to my trade and other payables. Remember, current liabilities. Then under my trade and other payables, so I'm just going to come here and I'm going to say plus, I'm going to add here 9,500. Remember, we have already recorded our creditors control and other amounts, so I'm going to come and say plus 9,500, where under my trade and other payables. Very important, under trade and other payables. Okay, can I go on to the next adjustment? Are you ready for the next adjustment? Okay, let's do the next adjustment then. It reads, SARS income tax. After taking into account the corrections above, it was determined that an additional, listen to this one now, all right, an additional 85,250 is still owed to SARS in respect of income tax for the year. We understand that during the year, we make what are known as provisional tax payments. Now, we have made provisional tax payments of 1.2 million. Of that 1.2 million, we have now been told that we still owe 85,250. We still owe 85,250. That means then, when we come here to record our income tax, we'll now say the provisional tax payments that we have made, which is 1.2, we will now add the amount that we still owe, that is 85,250. That means the income tax that we have incurred for the year, for this financial year, is now an addition of the two amounts, which is 1,285,250. That is how you would do it, because we still owed. That means from the provisional tax payments, we must still pay. So we add it. That gives us our income tax amount for the year. So if we must still pay, we're dealing with the what? Trade and other payables. So I'll come here and then, remember, under our current liabilities, you could have brought it under trade and other payables, or I can come here and record it separately, where I can come and say my SARS income tax, where I'll even show the calculation. All right, okay, in this case there was no need for calculation. The amount is straight, which is your 85,250 under trade and other under current liabilities, whereby you can also put in trade and other payables depending on the answer book that you would be provided with. Okay, but in this statement of financial position, you would see when we reflect it later that you were to record it separately. All right, now here's the final correct answer on the correct net profit calculation. All right, so we ended up with our 3,474,800. This was the final answer over there. Okay, now once we have that answer, we know that we are to do note number 8, which is your retained income. We start with the balance at the beginning, but you can see here that part is shaded. Must I write in the shaded part? Certainly not. Whenever you see a part of your answer book shaded, do not write in that space. It is not for you to write in that space. You just waste time writing, because the examiner is trying to say, do not write over here. Hence, that part would be shaded. Okay, so I'm going to come here, and then the next thing that I'm going to have here is my what? Remember, it starts with balance at the beginning. After that, it is your net profit after tax. Net profit after tax. All right, how much is that? 3,474,800. 3,474,800. Okay. Last week, I think we did one similar to this one as well. So you can see that it's a trend of examiners that they would require to calculate a correct net profit after tax. And then that amount would also bring it into your retained income. You should also practice along those lines as well. Okay. Then after that, what comes next? We know by format that here I should have my what? Repurchase. Here I should have my repurchase of shares. Okay, so format is of great importance. Format, you must see it even when your eyes are closed. That you have balance at the beginning, you have your net profit after tax, repurchase of shares, ordinary share dividends. You should know your format. Format, very important. If you have not yet written your March test, remember to practice formats. All right, formats are of great importance. The repurchase of shares. How many shares were repurchased? Can you see them? There, 26,000. So I'll come here, then I'll say my shares repurchased at 26,000. And the amount above, this one was an easy one. So because you were given the amount above, so I'll come here and then I'll say 3. So it becomes your 26,000 multiplied by your 3 and the amount above. So you'd come here and then you end up with your 78,000. That is your repurchase of shares. All right. After the repurchase of shares, what comes in? It is your ordinary share dividends. All right. And I'm now wondering, I know that I must have 2 amounts for dividends, your interim plus your final. But here I'm given one line. What does that mean? Let me read the information. Bullet number 2. The business did not pay interim dividends. Oh, so that explains why I have one line. That explains it. Okay? A final dividend of 65 cents. So here I'm just going to come and I'm going to say my final dividends now. And my final dividends are how much? They said 65 cents. And how many shares was I having here? 1.8 million. Okay, multiply that by 65 cents. Okay, how much was that going to give me? 1,170,000. Someone is saying, but Mr. Simbi, why did you have to calculate it? Because it was given. Where was it given? Remember, 30 June 2021, there it is, shareholders for dividends. So it was given. It was given. If it was not given, this is how you would have calculated it. Okay, but in this case, it was given. All right, so you would know that in your normal format, you would have a line here, and then that same amount, you bring it up again here, 1,170,000. Then that was it. It was over, just like that. Okay, but we know for certain that once you have final dividends, they must be recorded in the statement of financial position. You're correct. Your shareholders for dividends. So I'm going to come here under my current liabilities. What do I say? Shareholders for dividends. Shareholders for dividends. Okay. How much is it? 1,170,000. As simple as that. As simple as that. Remember, we are building our statement of financial position. So whatever calculation we do, we must be able to throw it in there as we complete our statement of financial position. Okay, let's go on to the next adjustment. Are you ready? Thank you. Let's go. It says, debtors with credit balances totaling 11,000 must be transferred to the creditors ledger. This is one of the common adjustments. You will find this in most of the statement of financial position adjustments. A very, very, very common adjustment. Okay, but let's see what we were to do. Okay, so I've prepared 2 small little ledger accounts to explain our adjustment here. Debtors. So that means we're going to start in our debtors ledger. Here is a plus, here is a minus because it is an asset. Debtors with credit balances. Debtors with credit balances. So here's my credit side. Credit balances, 11,000. Must be transferred to the creditor's ledger. Creditor's ledger, here is a plus, here is a minus. So if I'm to transfer, I'll come here, 11,000. And then to complete double entry, I'm going to bring it now here, 11,000. There it is. I've completed my double entry. So it therefore means I would then come here to my what? To my current assets. What am I saying? I'm coming to my trade and other receivables. Trade and other receivables. Remember, we have made several adjustments to this one already. Then I'm going to say, what did I say here? It's a plus. Plus 11,000. Plus 11,000. I add the 11,000. Where else do I go? Current liabilities. What do I say? Trade and other payables. To my trade and other payables. Remember, we've done several adjustments as well. I'm going to come and say plus 11,000 as well. Plus 11,000. Are we good? Thank you. All right. So let's continue. Next adjustment. Adjustment B. The accountant omitted the closing stock figure of formal suits in the trading stock balance provided in information A. Okay, you need to understand this. From the original paper that we've extracted this, there is a question which speaks to the calculation of an amount for inventory using one of the 3 inventory valuation methods. But you have not yet done inventory valuation. That is your FIFO, specific identification, or weighted average. Hence, I have taken away that adjustment. You will see, if you take the original paper, there is a part of an adjustment which I've extracted. We don't have to struggle about that. So, you will find that this adjustment is put in a bit different. I've done the calculation for you in simple words. All right? And the amount that we must adjust is 675,500. What is that? It is inventory that has been omitted from the closing stock figure. So from this figure, we have an amount that was not added, which is a 675.5. Don't worry about all those calculations. We are going to do that in the coming term. All right. So it means I'll come now under my current assets, and I'm now going to say inventory. Inventory. I'll take my trading stock figure, which is my 4,198,500. What comes next? I will add the amount that was omitted, not recorded. So come and say plus 675,500. Are we good? All right. Let's go to F now. On 30 June 2021, Jimo Limited returned 10 ladies' coats to the supplier, bargain wholesalers. The selling price was 1,750. So they're giving us the selling price here. The markup was 25% on cost. No entry has been made. So we returned some inventory, but they did not give us the cost. They gave us the selling price. You have to understand that we record inventory in our inventory records on cost, not on selling price. So what they gave us here is a selling price of 1,750. We need to establish the cost. So we know that cost is always 100%. Cost is 100%. And then, in this case, our markup is 25%. That means our selling price is 125%, which is the 1,750. We're still good. Now, what we want is the cost, which is 100, over what we have, which is 125. Multiply that by 1,750. We want to ascertain the cost per coat. All right, let me see your calculators. Okay, thank you. I see some of you are already punching in. How much do we get here? All right, we get 1,000. Say it again, 1,400. That is the cost. So each coat is 1,400. Each coat is 1,400. And how many coats did we return? We returned 10. So we say multiply that by 10. How much do we then get? 14,000. Okay, so we have returned inventory to the value of 14,000 back to the supplier. and we're told no entry has been made. So if inventory has been returned, we come here, we say minus 14,000. That inventory is no longer with us. So we take it out of our business books, minus 14,000. But we also understand when we bought the inventory, it increased our creditors, trade and other payables. So on our trade and other payables, we have an amount which is your creditors control, 1,253,000. But we have retained some stock of 14,000. So we come here, then we say minus 14,000. We don't owe them that 14,000 no more because we have returned the inventory back to them. Once you return the inventory back to the supplier, it decreases what you owe them. So you will see I have two entries here. Minus on my inventory, that inventory is no longer with us. Minus on my trade and other payables. We don't owe the supplier that 14,000 no more because we have returned the inventory back to them. Is that making sense? Okay, thank you. Thank you. All right. Can I move on now to the next aspect? Okay, so I can go on to the next adjustment. And then we're almost at the end of this particular activity, which is activity 2 from the November 2021 paper, NSC November. The following financial indicators were calculated. So we have been doing statements of financial position with financial indicators, I think, for the past 3 weeks or so. So today, as we are doing the last statement of financial position, because next week I've already promised you, same time, Friday, 2 p.m., we are going to start the cash flow statement. In this question, we're given the asset test ratio, the NAV, that is your net asset value per share. I've been explaining this financial indicator, I think, for the past 2 weeks as well, or the previous 2 weeks, I have explained this financial indicator. What we have already done, remember, we are given amounts already. That is our inventory. Remember, we did this inventory, so it will give us that figure. Trade and other receivables, it gives us that figure. Are we together? And then cash and cash equivalents is the balancing figure because we are given this 8.7. So you'd say 8.7 million minus that, and then it will give you your cash and cash equivalents, which becomes the balancing figure. So that area was not a problem. With the statement of financial position, whenever you see that amount is not given, it is most likely to be a balancing figure. That is, if the examiner has not told you already, that is going to be a balancing figure. Okay, so our current assets are sorted, but we know here that we must calculate our current liabilities, and we are given the asset test ratio. In the previous week, we dealt with one where there's a current ratio. If you don't know how to use the current ratio to complete the statement of financial position, I think I've done it in the previous 2 weeks. Please revisit those lessons. That will assist you greatly. All right, so what is the formula for the asset test ratio? The formula is your current assets minus stock, that is your inventory. Current assets minus stock as to current liabilities. Let's put that into figures. How much is my current assets? There it is, 8.7 million. 8.7 million is my current assets. How much is my stock? 4,860,000. 4,860,000 as to my current liabilities. The answer is 1.2 as to 1. Okay, let's solve it further. It simply means if I say that minus that 8.7 million minus 4,860,000, how much do I get there? I need calculators. How much do I get? 3 million. Say it again. 3,840,000. 3,840,000 as to my current liabilities. The answer is 1.2 as to 1. Are you following that? So it means I can get the answers if I can cross multiply. I cross multiply. Therefore, I'll end up with 3,840,000 is equal to 1 1.2 current liabilities. What do I then do? I divide by 1.2. I divide by 1.2. That will mean that my current liabilities, how much is that going to be? That is your 3.2 million. 3.2 million is equal to my current liabilities. So I'll come here now under my current liabilities. I want to show my examiner I know what I'm doing. I took my 3,840,000, which is my what? My current assets, and I divided it by 1.2. I divided it by 1.2. And then I ended up with 3,200,000. That is how I got my current liabilities. Once I have my current liabilities, I know that I am missing an amount for bank overdraft. Okay? I'm missing that amount for bank overdraft. So I'll now say my 3.2 million. Let's do it together. Let's do it together. Let's see if we can find our calculator. There it is. Okay. So we now say on our calculators, it is my 3.2 million. My 3.2 million. All right. Minus the first one, turn to the payables, 1,259,500. I subtract that. Then I'll come again and say minus again 1,170,000. I'll go again. Then I'll say minus 186,000. Minus 186,000. I'll go again and say minus 85,250. 85,250. And then I'll remain now with 499,250. That becomes my bank overdraft. Let's put it here now. It becomes 499,250. That's my bank overdraft. 499,250. Okay, that's my bank overdraft. All right. Once I have my bank overdraft, that means now we are just concluding this question now. We're just about to wrap it up. We're wrapping up, actually. We are concluding this one. Let's go and see. The next part now has to do with my NAV, net asset value per share. Remember the formula? We've covered it in a couple of weeks that have passed. The formula for my NAV, shareholders' equity over my number of shares in issue. Number of shares in issue. You multiply by 100 over 1. Your answer must be in cents. Your answer must be in cents. Okay. And what we are told is that we have 1.8 million shares in issue at the end. So when I come here, if I'm to get my shareholders' equity, the easiest way is to simply take my number of shares, which is my 1,800,000. Then I multiply that by my NAV. But to make it easy, I divide this by 100 first to make it easy. So I'll come here, then I already have 5.4. I multiplied by 5.4. So I'll just divide by 100 already on this side so that I don't have to divide by 100 after I find the answer. My answer will already be divided by 100. So I'll come here and then I'll end up now with 9,720,000. 9,720,000. Okay. And then if I'm to get my ordinary share capital, I'm simply taking my 9,720,000. I subtract 3,240,000. That simply means my ordinary share capital is 6,480,000. 6,480,000. Okay, let's see. All right, this is about it. And then So this is what we've calculated with our NAV. This is what we calculated with our NAV. And then we got that one. And remember, we have covered the loan already. And then our current liabilities we calculated. And we got 16,762,000. That is after we have added our equity plus non-current liabilities plus current liabilities. It gives us 16,762,000. The same amount will be shown now when we come to our total assets, 16,762,000. Even if that part was shaded, remember, the shaded part we do not write. Okay, and I wanted to keep this here. Figures are not required in the shaded areas. In the shaded areas, we do not write in there. Figures are not required. And therefore, this then concludes our statement of financial position. All right, we've come to the end of today's class. It's been an interesting topic, that is the statement of financial position. Remember, we started doing it with note number 7, we did note number 3, we went on to the correct net profit calculation. And today we conclude this topic. If you've missed any lesson, please check again on this very same page. You will find the previous week's lessons. We've covered the statement of comprehensive income, we've covered the statement of financial position at length. In next week's class, I'm going to be focusing on the cash flow statement. So I hope to see you again next week, same time, same place. Make sure calculators are up and ready, pencils are sharpened, and you are there. And remember to tell a friend that classes are continuing. Until next time, it is goodbye.